Hey everyone, welcome to the Appraisers Club Town Hall meeting. I'm hoping that everyone could see my screen here. I'm trying to make sure it's not paused. Over to the right, you'll see a chat box. If everyone could hear everything okay, please let me know. And if you could see the screen just stating the town hall meeting and questions and answers, let me know if you could see that as well. That'd be great. All right, great. Well, I'm very honored to have a special guest, David Brauner, on the webinar with me today to answer some questions about E&O insurance. David Brauner is the owner of OREP, the Organization of Real Estate Professionals, which helps appraisers, agents, brokers, and home inspectors find affordable and quality E&O insurance for their business. He is also a publisher of WorkingRE, an award-winning publication for appraisers, inspectors, and other real estate professionals. He is an appraiser advocate, always looking to bring the issues that are facing appraisers these days to the forefront and improve the profession. Thanks for being on the webinar today, David.
Thank you very much too, Brian, and I want everyone to know that I did not write that. So I appreciate that very much, that I do try to advocate for appraisers, and I've been doing it for about 20 years, so I appreciate that, Brian, and I also appreciate the invitation.
Yeah, really glad to have you on the webinar today. So if you want to find out, I'm going to give this announcement at the end as well, but OREP can be found at orep.org, and WorkingRE can be found at workingre.com. So if you have any questions, any E&O questions for David throughout the webinar, if you could just use that chat window. I'm going to make sure I have mine up here. The chat box or the question box, and we'll try to get to those by the end of the webinar, or maybe even throughout the webinar if it pertains to the current question I'm asking them. I came up with this list of questions from Appraisers Club members and some of my own that I've just been curious about for the past few years. But before we dive into that, I wanted to share a technique that I've been using lately to get a lot more lender work. And as everyone knows, in the club, we try to teach appraisers to get more non-lender work. And at one point, I was doing about 75% all non-lender work. But since I do have to update the AMC directory annually, I do it actually semi-annually, every 6 months. I'm starting now and making sure to add all the best AMCs that are currently sending work now, and I weed out all the bad ones. But this year, what I decided to do, because some of my AMC work was slowing down, was I decided to go into all my past clients, make sure I had all my information updated, because if you don't keep that stuff updated, they're just going to stop sending you work, and you're not going to really know why, but it's probably because you haven't updated your E&O on their website, or maybe your new license information. So I started to go through my list, updated all those first, but then what I did was I went to my state board and I got the list of all the licensed AMCs in California, and then I used that and I cross-referenced it with my AMC directory. And if you're a club member, you could just go into the club and search for the AMC by name, find the direct link to the enrollment form, and you can enroll. It makes it super easy. None of the other lists do that. All the other lists just either have a link to a website or some contact information. But the great thing about my directory is that, inside the club, you just click on the link, sign up. If you buy the electronic version over at like workingre.com, you just click on the sign up link and it takes you directly to that page so you can sign up. It saves you a lot of time, and I also put the companies that are sending me the most work and other appraisers the most work at the top of the list. So you don't waste like hundreds of hours signing up to all the companies. And, by cross-referencing with the list, with your state list, you don't have to sign up to a ton of companies. If you do have the time and you really need the work, I still suggest going through the entire list, because almost all the companies are trying to go national at this point. And if you focus on like the top 40 to 60, which are the companies that are sending me the most work and other appraisers the most work, then when they do go national, you'll already be inside of their database. So it's really good. I like doing AMC work, and I picked up probably 3 new clients in the past month. And these are clients that are sending me 3 to 5 requests every week. Minimum $400 per appraisal. I mean, of course, I still get the lowball offers, and I just turn those out down or counter offer. But most of my AMC work these days average $500 an appraisal. So you can't beat that. And I don't turn that stuff down when I'm doing like divorce and estate appraisals, sometimes for as little as $350, $400, and then I might have to go to court. I have no problem working for the good AMCs that are paying me on average $500. So it also gives you that ability to pick and choose the work from the best clients that you like to work with. I've received orders up to $2,000 for doing really complex assignments, and I enjoy doing complex assignment work. I mean, who doesn't want to go into a $5 million home overlooking the ocean? So I really enjoy that type of work. I put that directory out annually. You know, as I've said, you can find other lists on the internet, but I do verify all the companies in my list twice a year, weed out all the bad guys, and you're going to save a ton of time. So that's a good way to do it. But you do need to get started with a good directory, get a copy of your state list of licensed AMCs, cross-reference it, and if you do find them at the top of my list, sign up to those first. Then if they're not at the top of my list but they're still in my directory, I'd sign up to those next. And then if you don't find them in my directory, you're probably going to have to do some research, go to their website, find the sign-up link. And if they have a sign-up link, I suggest, you might as well just use their online application. But if they don't have an online application, I kind of use that as an indicator that it's probably just another appraiser that's formed an AMC to try to do fee splits with other appraisers. And it probably won't pan out. So unless you know they're sending work, I usually just avoid those completely, because you could spend a huge amount of time, just wasting time. And I call these guys too as well. I'll call them and find out, okay, are you actively sending work in California? And they'll tell me half the time. If they don't have that online application, more than half the time they're like, no, I don't really have anything in California right now. And you could tell they're just an appraiser trying to do fee splits if they have that extra work. So that's going to save you a lot of time. So a while back, I also did a webinar with David about maximizing AMC orders and income. That's still available over at WorkingRE on the webinar page. And we've been talking about doing an update on that. So for club members, you'll get that for free. But anyone that's not a club member, you could also get more information on that in the future. We're probably going to do something like that maybe within the next 2 to 3 months, I believe. So, so David, thanks for joining us. And the members of the Appraisers Club and I, we came up with these questions. And as I stated before, if you have any questions, anyone has any questions on the webinar, just go ahead and put them into the chat box or the question box, and we'll get to those. So before we get started on the questions, I wanted to ask you, when did you start the OREP, and why did you start it? And, give us a little bit of a background.
Okay. Well, first again, Brian, thank you very much for having me. And I want you all to know that I don't have the gift of gab. So if if there's more clarification that you need or more to this, please put it in your chat box. I'll try to answer it. To be brief, I've been reporting on the industry for 20 years, and also being point of sale insurance for real estate appraisers for 20 years. I started at a competitor of mine now, FRIA. I started their magazine, The Communicator, so you old-timers might remember that.
Oh, yeah.
Yep, and then I started my own company here about almost 13 years ago for the reason that most people go out and start their own business because they think they can do it better. And when I did start my own insurance business here, OREP, I also started WorkingRE. Communicator kind of faded away, and we're still here. So I've been covering the industry for, like I say, 20 years, and it's been a great experience. I feel like I'm on the same age as most appraisers. I think I'm in my mid-50s, and I think that gives me a little insight, I think, into what you're feeling and thinking, it's been a great career choice for me. So that's it, Brian.
Yeah, I really enjoy WorkingRE, and I love your blog and the articles that you send out. How do you get the printed version, though? Because I know some people don't get the printed copy of your magazine. How do you go about getting the actual printed copy? I love reading through that thing.
Okay, well, for your club members, if they don't get the printed version every issue, just send us an email and we'll do that for you. Basically, every person who buys insurance from OREP is guaranteed delivery of that print magazine, as are everyone who subscribes to the magazine, the paid subscription. I don't know exactly how many licensed and active appraisers there are nowadays. I think there's somewhere around 80,000.
Yeah.
We sent the print magazine on a rotating basis to about 60,000. So that includes every OREP member, everyone who subscribes, and then the lucky few, out of that 60,000 distribution. So if you want to guarantee a subscription, you can pay for it. If you're a club member, we'll give it to you free for a year. And if you pay for it, there's a lot of other discounts that you get. You get CE at cost. You get all these webinars discounted, the AMC guide discounted, and a bunch of other benefits we try to give you.
Oh, awesome. Okay, so all the club members, you could just email me at support@appraisersclub.com if you're not getting the printed guide. I mean the printed magazine, and I'll get that over to David so we could get that taken care of. I really appreciate that.
Yeah, and that's a $50 value, so it's worth something.
Wow, that's awesome.
Yeah.
Okay, so over the past few years, have you noticed claims going up or down?
You just kind of faded out there, static out, but I think what you asked about claims, and
Yeah.
I think they are plateauing. Believe it or not, I know most people think that insurance companies are gouging and so forth and so on. I sort of have had talks with some of the ones that we deal with, and in the real bad years following the collapse, I think most of those insurance companies actually lost money. So there were just a huge number of claims, very costly claims, but I think that that's plateauing. The carriers that we use have been in there a long time. They're committed to the industry. They're still writing, and in fact, in January, one of our carriers is lowering rates slightly.
Oh, really?
Yeah. So I think that's an indication that they're plateauing and that the worst is over.
And who's actually suing the appraisers? Is it the lenders or the borrowers?
Most of the time that there's something that's serious, it's a lender.
It's the lender.
Yeah, borrowers sometimes, but for a borrower, a lot of times it's frivolous. But borrowers have and do. They say that they wouldn't have purchased the home. They default on it for whatever reason, and then they say that if they knew the true value, they wouldn't have purchased it. So we do see some of those, yes.
Okay.
And we've seen claims going back as far as 2005 even. So
Wow.
Yeah.
Yeah, because I mean, I could see with how real estate just went insane over those years that a lot of people put the blame on appraisers. So if they're feeling that they overpaid, I think a lot of it, their first gut instinct is to be like, well, why didn't the appraiser protect me? But, we were just appraising for what the property was being valued at that time. We had no control over that. So I was just curious to see if it was just borrowers getting upset over the process and just trying to sue whoever they could. But I did have a good idea that it had to have been the lenders that, are possibly going after, they think there's errors or something going on the appraisal.
Right, and that's why we are publishing that book, The Expert's Guide to a Defensible Work File and so forth, because if you can prove and support your adjustments and support your value even 10 years later, I think you'll be in pretty good shape. Obviously, we know that it wasn't the appraisal that caused the borrower to lose their job or to overspend, or we know that, and we know that in some cases there were bad appraisals, but in a lot of cases the appraisal was probably very good and ethical and so forth. But if the work file is not solid, it opens you up to some problems. So that's why it's really good to have a defensible work file, and that book is good for that reason. We sell that at WorkingRE, and we've had some webinars about that too. But I feel it's a real contribution, that book.
Yeah, and does that, I mean, it lays out all the steps for what you should be saving in the event of a claim?
Right. It's a do and don't, and it's written by someone who's defended appraisers, with state boards, and they know what these guys look for, and they know the little picayune stuff. Plus, it's about good appraising too, just the stuff that you should know from USPAP and so forth. It tells you how to dot the I and cross the T's.
Oh, that's good.
Yeah.
So what happens in the event of a claim?
Well, from our standpoint, the first thing you should do is to report it to us if you have insurance. There's a lot of reasons to do that. One is that you get the help of experts. There's free helplines that all the insurance companies we work with offer. You also don't say anything stupid, to shoot yourself in the foot and to cause more problems if you have an expert who's answering for you. There's also other reasons. In the policy, it basically says that it's your duty to have to report that. If you don't report it and you report it a year later and that delay hurts your defense, theoretically they can refuse coverage.
Right.
And there's also some other reasons too. It's a claims-made policy. All of them are claims-made, and that's kind of a complex topic and issue, and we've written a lot about it. But basically, if your insurance stays in force all throughout the years, even if you stay with a carrier or you switch carriers, as long as you don't expire, your insurance doesn't expire, you're fine. But if there's a break in coverage, if your carrier doesn't do a good job, your agent, in reminding you, hey, you need to renew, and we do that all day long, and a lot of times almost to the point of some insureds off of, but we don't do it to keep our business going as much as we do it. I feel like that's our duty, that's our responsibility, to let you know that if you let that lapse, it's because you're either going out of business or at least you know what you're doing and you know what the risks are, that all of your past appraisals, all the coverage for them is gone. So that's why it's also important to report a claim right away, because then even if your insurance does lapse, that claim is on the record and you will be covered even if nothing comes about it for a year or two and something rears its ugly head later, you'll be covered.
Okay, I didn't hear that properly. So if you let your insurance lapse, then you're saying you're still protected on
That's
past
right.
appraisals?
If you report that claim, okay, let me take a step back.
Yeah.
You can switch agents at renewal. It's not incumbent that you stay with us or you stay with anybody else. As long as you do it before the policy expires, all the coverage stays in force. But if you let it lapse, or you decide you don't want to appraise for 6 months and you let it lapse for whatever reason, or you're on a payment plan and you stop paying and it's canceled, then all of your past coverage goes away. Now,
okay.
Right. Now, we have stories on OREP.org. If something of this is unclear, email me and I'll send you a link to the story. But the point that I'm trying to make is about claims. If you get wind of a claim and you let us know and we get it on the record, even if you let your policy lapse later, that claim is on the record and the insurance company has a duty to defend you. So it behooves you, it's in your best interest to report a claim, anything in writing from an attorney, even anything in writing from an irate homeowner. If it's in writing, I really suggest that you get it on the record. Your insurance is not going to go up if it's a frivolous issue. In most cases, in the majority of cases, it won't go up. It won't be affected. But it's good to get it on the record.
Okay, what happens in the event if you do decide to retire or take like a year off from appraising or something and you let your E&O lapse and someone does try to sue you for an appraisal you did 5 years ago? That company that covered you in the past is no longer going to help you out in any way, right?
There's no coverage.
No coverage.
But that's why, again, we ask everybody at renewal, are you going to continue appraising? If so, please get this renewed somewhere. If you're retiring, we have what's called tail coverage. I won't get into that. It costs a little bit amount of money, but it provides good sleep for you for your years of retirement because it protects all those back years.
Yeah, that's a good thing to know. I mean, I never thought about that before until recently, and if I ever did plan on retiring, I better make sure I get some tail coverage.
Yeah, and your question is what happens if you have insurance? That's what happens if you have insurance. If you don't have insurance, get some Ambien because you're going to have a bunch of sleepless nights. You're going to have to pay an attorney. The last I heard, the average cost to defend a lawsuit was about $25,000. So,
wow.
So if that's about 30 years of paying premium. So, so if you look at it that way, and I'm an insurance guy, I believe in insurance. That's probably why I have it. It's bailed out me many times, or at least a couple times. So I believe in it. And again, if you have assets, it's a good idea.
Yeah, definitely. Have you seen any AMCs suing appraisers?
I have not. I have not seen. I've seen some AMCs get sued, but I haven't seen any sue appraisers. Not that I'm aware of.
So because I thought I heard about something in the news about AMCs getting sued and then the AMCs suing their appraisers, but most likely what's happening are everyone's getting sued. The appraiser as well as the AMC.
It's typically the lenders, and sometimes the lender, the AMC is owned by the lender, so maybe that's what you saw. And it could be that I don't see everything that's out there, but I have not seen any AMCs suing appraisers, but it's possible.
Okay. And what are the most common claims that you do see, and how can appraisers avoid those?
I mentioned this to Brian in one of our previous discussions. There are a lot of suits about homes being foreclosed upon, loans going bad, and appraisers being sued for an overvaluation. There are many of those. But here's something that you can avoid. We also see a handful of claims for mismeasuring, for improperly measuring. And that is a very cut and dried issue. If they can prove that you mismeasured by 200 square feet, and especially small commercial properties, it might be, or you mismeasured by 500 square feet and it's $200 a square foot. You can do the numbers. That's $100,000.
Yeah.
And that's very clear cut, particularly with commercial properties that are leased by the square foot and paid for. Some people just mismeasure them. Some people that I've seen, they rely on blueprints or original plans or documents. In one case, there was a fire, and a lot of the square footage was no longer usable, but they didn't know that. Either they weren't thorough enough, and there was, I think, like I said, 200 square feet that wasn't usable anymore. And those claims, there's not much you can do about them. They're very clear cut. This is what you said the property, this is size, and this is what the size actually is. So I would say that, be careful when you're measuring. Don't just rely on what the MLS says, because we all know what goes on with the MLS, right? It's a lot of times for marketing and not so much for accuracy.
Yeah, definitely. Even the public record, I find, in San Diego, there's a fair amount of times that the public record isn't even correct, even though they had the permits all issued and recorded years ago.
Again, it's good to check more than one source, and permits, things change.
Yeah. So have you had any funny stories or any crazy stories that appraisers have been unfortunately sued over?
Well, you know what? Maybe this speaks to my sense of humor, Brian. But there's a couple kind of hard luck stories that kind of go, they kind of go with insurance. I guess that's why I picked them out. But there was one poor appraiser who, he had an extended bathroom break, I guess, and and flushed the toilet,
Yeah.
and the toilet overflowed, you know, and there was a lot of expensive flooring that was ruined. I don't know why he couldn't turn the thing off, or maybe he went away and it leaked later. But you know, that was, I don't remember if that was $5,000 or $10,000 in damage. But it, it was obviously an expensive home. It was probably some kind of upscale flooring. But here's the important part to remember. You know, an insurance guy. But if you don't have general liability, then that's not covered. You know, your E&O is for you making a professional mistake, doing damage when you're at the property, knocking over a vase, ruining flooring. And this guy did not have GL.
Okay.
So so a GL policy is about, I don't know, a couple $100 a year, $500 a year, depending on. And the guy who has your, well, actually, we can write it for you even if you don't have your E&O with us. But the guy who has your E&O may have an add-on, or we have an add-on. It's maybe $500 a year. And ours, a lot of times, they're BOPs. They're business owner protection, which means that if you have an actual site, it'll cover slip and fall at your place. It'll cover loss of business, theft. It's a pretty comprehensive policy. But you know, that's one hard luck story. And I actually have another one like that. An appraiser was walking across somebody's property and didn't see that the cement was just poured, you know.
Oh no.
And ruined that, and they had to come out and report. And I think that was also in the several $1,000 range, and that's also a GL claim. Most GL policies don't have any deductible, so it's a zero deductible.
Oh, that's good.
Yeah, and that would have covered that. So I guess those aren't really funny, but you know, but if you have the hard luck sense of humor type of thing, you know, it's kind of funny, but it's just another thing to worry about, and GL will fix that.
Yeah, you know, I've never had general liability insurance, and I didn't even think about it until you recently told me that story about the concrete. But so you're saying it could be only a couple $100, and what does it cover you up to? Because I've noticed a lot lately on the AMC applications that one of the questions they're putting in there now is who's your general liability insurer and what the coverage amount is.
Well, you know, most of them don't come in anything less than $1 million.
Oh, okay.
And you know, here's another thing. I just talked about property damage. GL, while you're at the premises, also covers some bodily injury. Sometimes there are sublimits, meaning that you don't get the full $1 million. It might be capped at something short of that. But you know, bodily injury, I mean, you know, we've seen some horrible cases, particularly home inspectors. You know, there was one case where a home inspector visited a property, and I guess there was like an island, a kitchen island that wasn't nailed down.
Okay.
And he leaned on it or sat on it or did something, and the thing tipped over and hurt a child. You know.
Oh no.
Yeah. So there are some. I've heard of someone backing out of a property when they're leaving a property and you know, running over somebody. So.
Oh man.
Yeah. So bodily injury, those things are not E&O claims because it doesn't go to your value. It doesn't go to your report. It goes to the damage that you might do when you're at the premises. So again, I hate to be the bearer of bad news here.
Well,
you know,
it's better to be protected.
Yeah, for a minimum amount of money. Again, it's a sleeping aid.
Yeah.
So if you need that, give us a jingle. Give your agent, if you trust them better or more, give them a jingle. I think almost every agent out there who has your E&O should be able to get you GL.
I'm going to have to look into that. Remind me next time we talk.
Yeah.
Because I know when I got insurance through you guys, I got some extra insurance because I do a lot of work with the AMCs. Right. And at that time, you know, I did hear those articles about, you know, additional liability because of working with the AMCs. And I was able to get some extra insurance from you regarding that AMC because I do so much AMC work. Can you tell us more about that?
Yeah, and this is something that's an excellent add-on. I mean, it's optional. Some people really are you know, they begrudge buying it. But here's what it's for and why you need it. If you're signing those third-party liability waivers that most AMCs, or a lot of them, at least they were, asking you to sign, what that is doing is obligating you and your insurance to cover them should a problem arise from your appraisal. Now get this, even if it's not your fault,
Right.
even if it's their fault in the way that they ordered it, or when they stripped out the data there was a mistake, whatever the problem may be, if they get sued, and they should all have their own insurance, which is ridiculous why they're making you cover them, but you want the work, right? So you're signing the box, and you're now obligated to cover them. But here is the rub. All E&O, the ones we offer, the ones that anybody offers, does not cover the third party. The AMC is the third party. It covers you if you're sued, but it does not cover the AMC on your behalf.
Right.
So if you have assets, again, you know, this coverage, and I believe we're one of the only ones who offer this. A lot of the other carriers do not offer this coverage. It's about $75 or $100 add-on. Again, it's up to you, but that's what that coverage is for. It provides coverage, third-party coverage, so that if a bank sues the AMC for something that is connected to your appraisal, your insurance will not cover it unless you have this third-party AMC coverage, which is, I mean, you know, $75, $100. It's
and what
again, it's.
What does it cover? Like, what amount does it cover you up to?
You know, I'd have to check if it's to the full amount of your policy, the $1 million that you have. I think there's a sub-limit on that too, meaning it may be less, but whatever it is, it's better than nothing.
Yeah, definitely. I mean, I got it once I heard about it, just because I do sign up to so many AMCs just to test them out and just to find out more about their company and their order process and how much they pay. So I'll sign up to a ton of companies, and honestly, I don't read everything in detail like I should be, so it's a little bit of extra protection for me, for sure. But that's
right.
the cost.
You know, if you read those things that they're asking to sign, and from what I understand, sometimes they're what, 10 pages of fine print? Yeah. So and it should say in bold something like liability waiver, third-party coverage, something like that. And if you're an OREP member and you don't understand this, give me a call, or else if you're not, call your own agent. But we field a lot of questions about this, and it's a business decision whether you sign that form. And if you sign that form, we thankfully have a solution. A lot of the other carriers do not, but we do.
That's great. So what is recommended on insurance levels? Because when I'm going through these applications, I see crazy amounts, like only $250 and then $500 and $1 million is usually the numbers. And I've never done anything less than $1 million, just because that's what I was trained to do. And the houses that I appraise, I guess I don't even think that would cover half of the houses I appraise. So
Right.
what's the recommended levels on your insurance?
And Brian, you know, this is one answer that I can answer unequivocally. You know, $1 million, no less. You know, most of our policies have a $500,000 million, so you get the aggregate for total million. Why do I say that? Because most AMCs, there are still a few out there who do not, but most everyone requires $1 million in coverage. So what does this mean to you? And again, we have a lot of low-cost policies that are $500,000 million. The million is the aggregate. The million is the only thing the AMC sees. They stamp your application good to go, and you do it. Why is that important? Why is that important? Because if you get less coverage than that, and you find a new client who says, you know, Brian, I'd love to work with you, but I see here you only have a $500,000 coverage. I need you to upgrade. So you call OREP, and you say, I need to upgrade this to $1 million. That's great. Takes a couple days. We need to go to the carrier, and you need to get what's called an endorsement, which is another piece of paper. Because people, you know, policies are not reissued midterm for anyone. No insurance company does that. If there is a change or an addition, you get another piece of paper, which is called an endorsement. That takes a day or two. In that day or two, that $500 order is going to the next guy. So,
Right.
so if you're ready when you renew or you buy your insurance, you're ready and check the $1 million box, you're ready to roll. It's on your deck page. You don't have to lose any business.
Yeah, and what is really the cost difference? I'm sure it varies state by state, but as a percentage, what's the difference between a $500,000 policy and a $1 million policy?
Well, you can, it does vary, but you can look on the website and it might be $50, $60 or something. Maybe,
Wow.
maybe 100, but it just depends on, yeah. Let's say 10%. If your policy is $60, 600 would be 60. I think I may try to, while we chat, I may go up to the website. I think Isaac is on this call. Maybe you can go up and check a couple states and answer that.
Whatever it is very minimal. It's better especially if you're planning on doing AMC work, you have to get the $1 million anyhow if you really want to get work from them. And the cost is so minimal that, you really need to get the full $1 million of coverage.
Yeah, every once in a while I hear someone tell me that their AMC only requires $500,000, and if you're good to go, if you've never been asked for $1 million, then disregard what I'm saying. But I can almost be certain with you that the time will come when you are asked for $1 million. And
yeah.
If you don't have the $1 million, you could lose the job.
Yeah, definitely.
Yeah.
Are there any, what do you guys do is OREP? You'll go out and if an appraiser is looking for new E&O insurance, is the first time they're working with you, do you actively go out and check with a number of the best providers out there and find them the best rate, or how does that work?
Yeah, by and large, I think that's one service that we offer that some of the other guys don't. They are locked into one program and one program only.
Most of the other companies?
Yeah, all of them really, except for us. The big names, the big names, the guys who you've seen advertising, they all are, and that probably has its advantages. But one serious disadvantage is that we're not locked into that. So if you go to our website, we direct you to, if you go there, you'll see if your prior act date is before a certain date, use this policy. If it's after a certain date, use this policy, because they're the least expensive with the best coverage. If you're in a state that excludes FDIC appraisals, use this application because it does not. If you have a group or if you have more than one appraiser, use this application. So we either do that via our website, we self-direct you, or if you call, we do that in person. And I believe that is one of the big advantages that we offer.
Yeah.
Is that and we get policies from other companies all the time where we see it and they didn't know they had an FDIC exclusion, or they are paying $1,000 when they maybe only need to pay $600. So it pays to, and the other thing, it pays to shop.
Yeah.
No insurance company charges you to shop.
Right. Yeah. Are there any companies that are more recommended when you go to get insurance, or are there ones that you would definitely say, okay, if you have a policy with this company, we've heard some bad things about them and you should just avoid them? Do you have any information like that?
Well, it's unethical for an insurance agent to ever bash anyone else. I would say that most real estate appraisers know the 3 or 4 big names, one of which is OREP, who have been around 10, 12 years. Their policies specialize in appraisers. The underwriters have been dealing with claims for years. They've been dealing with disciplinary actions for years. The policies are written for you specifically. I think you can't go wrong with any of them. I think service sets us apart. I think price in many instances sets us apart. We're not always the lowest priced, but because I have that flexibility to kind of shake and move, I think more times than not we are one of the lowest prices. We only use the best companies, the A-rated companies.
Is there only a small handful of E&O providing companies? Mine is Lexington. is there only a small amount of companies that offer E&O insurance, or is there are there hundreds of companies?
No. I think they're only a handful. There's probably a handful more than the handful that I'm suggesting that you shop first, because they have the lowest prices, the best coverage, and the experience. There are other carriers that may put an appraiser in a miscellaneous category. Every once in a while, we get someone who's been with some outlier for 10 years, and they've, like I said, they paid $1,000, or maybe they needed to pay $600. But again, you can stick with the handful of our competitors, including ourselves, and you'll be fine.
Okay. I'm always worried about paying for insurance, and then when you go to actually use it, that it doesn't work.
No, there's a duty to defend. I know there's a lot of misinformation about that. These insurance companies are scared, shaking in their boots, really, to run afoul of the insurance commissioners, because we see a lot of these health insurance stories where someone doesn't get the liver transplant, doesn't get the heart transplant, and it scares all of us. These professional companies, they have a duty to defend, and they even err on the side of defending sometimes when they shouldn't.
Okay.
Just not to run afoul. But if which brings me to a good point that I didn't get to mention about when you're responding. Give these insurance companies every defense possible, every arrow in the quiver, every tool in the toolbox possible to provide you with a solid defense. When you respond clearly, respond cogently, without typos and, oh, they're stupid, this complaint is a bunch of BS and I'm not going to bother. Take your time, support what you're saying, provide facts. If you're not a good writer, go to someone who's a good writer. If you're not an expert with USPAP, hire an expert. If you're part of an association, get someone's help free, a mentor. Take your time and respond carefully, clearly, back up what you're saying. These guys are only human, and if they see someone who has a dashed off, unsubstantiated response, they're going to think this is the same way this guy does his appraisals, not carefully. And they will defend you, yes. You will be defended, but give yourself every opportunity to get the best outcome. Now, these people, especially with a complaint, even when you're dealing with the state board, they're human. If they can't even understand the sentences that you're putting together, what kind of appraisal do they think you're doing?
Right.
Honestly, and if you're not good at writing, that's no fault of your own. Get your son who's in college, graduate, or an English major, or hire someone and support it. Purchase the books that we offer or other books. Attend the webinars that tell you how to write defensible reports. Do the work, the hard work in the first place. But if you have not, and this is in the past, do the best you can. And if you made a mistake, admit it.
Yeah.
Say, I made a mistake. I realize it now. Here's what I've been doing to make sure it doesn't happen again. You'll be surprised. That goes a long way. It goes a long way to put someone in your corner.
Yeah, that's really good advice because, being an appraiser advocate myself, I do get a lot of phone calls regarding complaints, disciplinary actions, and then I get emails and I see it on the forums, and one of the biggest problems when it first happens to an appraiser is the appraiser is so upset. We get really angry when we're called to question about our reports, and the first thing you want to do is lash out. And I see it time and time again, and that's really good advice. Just keep a calm head, look at it from the outside, and respond professionally like the professional appraiser you are. That's really good advice.
Right. If you're going to lash out, do it to your husband or wife, or
to me.
Or to Brian, or to your blogging group. But that's public, so I don't even know about that. But
right.
Don't really try to restrict what you say publicly. about any ongoing anything, even about your methods, because you would be surprised if you can be identified. Someone will find out and they'll say, well, look, he says he does his methods this way. I'd be really careful about that. Also about anything that you reveal about an appraisal, that's restricted confidential information. Redact it. Don't give the address. Don't give all of that's important. But yes, to substantiate and reinforce Brian's point, I sat into one of the webinars that Brian did for us, and the same stuff holds true when you're dealing with an AMC. If you deal cordially and friendly and turn them down in a nice way and tell them why, or explain why you need more money,
right?
That's going to come back, and that's going to benefit you rather than alienate the other person. And really, as crazy as it sounds, these underwriters, these attorneys, they're human beings. These guys who sit on the boards at the boards. I'm not saying that they're going to give you a break if it's a black and white, but give yourself every opportunity to have a good outcome.
Yeah, definitely. I mean, and especially with the AMCs, how you're talking about the relationship with the AMCs, there's been many companies that I've worked for in the past and still do work for that they'll send me a lowball offer for like $200, $250, and most of the appraisers that I know are very offended by that, and they'll shout back at them or send a nasty email back. And what I'll do most of the time is explain, like, okay, this is a complex appraisal. I'll tell them why. Sometimes I might even do a little bit of research on it, but I'll break down even my quote. And one time I got approved for $1,700 by doing that on something that they sent me, a $250 appraisal request from a company that usually sends out really lowball offers. And they became a major client of mine, and they send me all their complex work, and most of my fees with that one company is between $1,000 and $2,000 now. So it's
Wow.
like, that's the only stuff I do for them. But if I would have just attacked them right from the beginning, they would have never contacted me again. So it is good to keep a nice, cool head. And they're just assigning work anyhow, and they're working for their boss, so they don't really have any responsibility with it for the most part.
Yeah, very good advice. Very good advice.
So I noticed in a recent article on WorkingRE about additional liability for review appraisers. Since a lot of appraisers in the club do reviews, a lot of the appraisers in the club, that's all they do, is they just want to focus on doing review appraisals for whatever reason. Some even have liabilities, so not liabilities, what word am I looking for? Disabilities that they can't go out the field to do reports anymore, but they do appraisal reviews. Could you tell us more about the additional liabilities for review appraisers? Kind of recap it a little bit.
I'm just making a note to myself, because that would be a great story, Brian, if you wanted to interview a couple of appraisers with disabilities who do reviews. That's a great idea. I think the key here, I don't know that there's additional liability, but the story is saying that there is liability. I think that there is an impression among a lot of appraisers that the liability is absent when you're doing review appraising, and that it's all on the original appraiser. But we had an attorney write that story, and if you go to WorkingRE and search review appraiser liability, you can get a hold of that story. I think his point is that there is liability, that not that it's additional necessarily, but that there is liability.
Man, I would imagine it'd be equal liability for the original appraiser that went out there, and because if you're the review appraisal, you're seeing it last. I would think that they would totally go after you as well.
Yeah, I don't know that you can quantify who has more liability.
Yeah,
but
that's true.
But even if you say to yourself it's similar, then you've learned something more than a lot of appraisers know.
Yeah, that's true.
That you just can't say whatever you want and try to be the good pupil for this AMC because they know that you want them to find a problem with this review. You have to you have to be just as diligent as you are with your appraisal.
Yeah, I mean, I stopped doing review work about 2 years ago because I felt like I was taking as much time as a full-blown appraisal, going out to field and everything, and I enjoy going out to field more than sitting at my desk and doing a review, and I had to charge them as much as I would to do, a field appraisal. So most of the companies don't want to pay you $400 or $500 for a review, but for me to commit, to be 100% sure that that appraisal was done correctly, I really felt that was the amount of time that it took. So I just stopped doing them altogether, and I think probably in the back of my mind it was, I felt completely liable about the work in that appraisal, and I had to go through it with a fine, comb. So
That's a good point. That's a really good point.
yeah, and do you, someone had a question inside of the webinar. What should the amount per claim coverage be? Are you?
Well, I think $1 million aggregate is really fine. That's kind of trying to predict the future. How much your claim is per claim and all that. But I think if you're at, like I said, we have usually a policy that's a $500,000 per claim, $1 million. It's not that much more for $1 million, if that makes you sleep a little better at night if you're appraising where Brian appraises here in San Diego. Again, I don't have the website in front of me, but it might be $60 more. I mean, spring for it. It's worth it. The amount of money for increments of insurance is very low.
Yeah, and you're talking $60 a year, because keep on thinking, okay, $60 a month because I take advantage of your payment plan.
Right.
Because it doesn't hardly cost anything, so I might as well just pay on a monthly basis. I like to split up all my bills over a 12-month period, even some weekly, just to keep the income going out on a steady basis, or the expenses. So only $60 a year. I'd definitely go for like $1 million for sure.
So Brian, I just pulled up our California, which is one of the, it's one of the more expensive states. The difference between a $500,000 million and $1 million is $13.
Oh my God! Wow.
Or $500,000 of coverage.
Wow.
And the difference between a $600,000 aggregate, which is not going to get you work for every AMC, as I said. The difference between that $600 total or aggregate and the $1 million total or aggregate is $12.
That's crazy.
Yeah.
Wow. And that's in one of the most expensive areas. So just go for the $1 million, especially if you're planning on doing any of the AMC work. So
Right.
So awesome. Well, thanks for being on. Did you have anything additional that you'd like to let us know?
Well, I was just going to say that when we're talking about the board complaints and all that, there's a good story. WorkingRE, State Board moves to curb frivolous complaints. It's State Board moves to curb frivolous complaints. It's written by Bob Keith, who has a webinar, free webinar for OREP members coming out about all of these things, how to deal with a complaint, and more than that, how to prepare yourself so that when it happens, you're ready. There's a nominal charge if you're not a member, but if you are a member, it's free, and also he consults with you if there is a problem, half an hour free.
Wow.
So, So I don't know what his rate is. It's probably hundreds of dollars an hour. So that's a big plus. I would really recommend everybody read that story. It was in the last WorkingRE print, so if you didn't get the print magazine, you should probably go online. It's there for free.
Yeah. And can we talk about the complaints a little bit? Because this was recently brought to my attention. Because you could have a homeowner that is just upset with you for whatever reason, and they could just file a complaint against you. And you have to report that to your insurance, and you also have to report that when you're signing up to AMCs, don't you? Yeah.
Well, yes. I mean, if they ask it, you need to report it, and it's a very convoluted, difficult process. And the deal is, it's different in every state. So I can't give you advice except that you need to know how it works in your state. Bob Keith is a great resource. This webinar that he did that's upcoming. We have a webinar from Tim Anderson that really is a great webinar about, you can find it on WorkingRE. Tim Anderson does a webinar about how to handle complaints, and he also wrote a story that's free, Beware Consent Decrees. There is a lot of stuff that you should know, but know this. If a homeowner dashes off a frivolous complaint because they're ticked off because they thought their home was worth more than it is. In some states, they will look at that. They'll call it. They have another name for it, like a you know, they won't call it a complaint. They'll call it an inquiry or something.
Okay.
And it will go away. They will review it, and if there's there's nothing to support the claim, it will go away.
Okay.
And in those states, you're very lucky because you don't have to check that box, yes, I had a complaint. Very few states do that. Most of the states, you have a complaint when that happens. You may be cleared, but you still have a complaint. It may take 6 months to get your answer. So if you are signing up for an AMC in the interim, you have to check that box, yes, I have a complaint. Now you have to tell them, well, it's frivolous, and again, answer professionally. It was frivolous, this is what it said, this is what my report did. I mean, it's a big pain in the neck. It's not fair. It's not right. You know, life is not fair, though.
Yeah.
When you get these complaints, you got to deal with them. But I would urge you to investigate how your state handles them. I would encourage you to check out this webinar. If you're an OREP member, it's free, this Bob Keith webinar. If you're not an OREP member, it's like $29. Check out the webinar from Tim Anderson. Check out his free story, Consent Decrees. And I'll go one step further and tell you, here's more bad news, unfortunately.
Oh, no.
Let's say that the homeowner is an idiot and your value, or let's even say that there's another complaint against you and your value is sound. They can still ding you for some USPAP violation or some other problem that's in the website if you don't have those T's crossed and I's dotted. And you should know how to handle yourself. You should know when to seek professional guidance. You should know what to say, what not to say, what to sign, what not to sign. We have a lot of we have a lot of resources for our members and for everybody, and we're getting more and more every day because, in my view, this is really one of the unspoken problems in the industry that a lot of people don't talk about, but we do.
Is it going up? Have you noticed, or have you heard?
There's a lot of them. There's a lot of them because Dodd-Frank made the requirement for borrowers to get a copy of the appraisal.
Right.
And they're putting information on there about how to complain.
Yeah.
And they're urging consumers and AMCs to complain. And these guys don't know what makes a sound complaint and what doesn't. A lot of AMCs don't know. They're not appraisers. They don't have local competency. And they're just dashing off these complaints, and here an appraiser has to spend a day writing a defense. But spending that day writing a defense is time well spent. It's not fair. It's not right. But don't let your anger get to you. Don't dash off a quick response. Get some of the resources I'm talking about. The webinars, if you forgot any of this, I think Brian's going to tape this or email me or email Brian, and he'll forward it to me. We'll direct you to him. There's free stories, and there's also very inexpensively priced webinars. I mean, we have to pay the presenter for their time.
Right. Yeah. What I'll do is I'm recording all this, and so I'm going to send out the recording to all the Appraisers Club members, and then inside of the club, I'll put all the links to all the information that we talked about today, the links to the webinars and everything. And the great thing about WorkingRE is he records all the webinars, so you can get them at a future time for whatever the cost of the webinar is to pay the presenter. But I'll put all those notes in there. And David, for being on the webinar with me, I'm sure we provided a lot of great information, appraisers that they didn't know. And yeah, thanks for coming on.
Well, I just want to say thank you to all the people who buy insurance from us, or who buy a subscription from us, or who have attended one of our webinars. Thank you very much. If you don't buy insurance from us, give us a look. Quotes are free. And, you know, one thing I think I showed myself here is maybe I do have the gift of gab. I don't know.
Yeah, you do.
But it's been an hour, and it went pretty quickly. So thank you, everybody, and we'll have to do more of this.
Yeah, definitely. So go to orep.org for the insurance information, and WorkingRE.com for the blog and the magazine information. Thanks again, David, and I'll talk to you soon.
Thank you, Brian.
Okay, everyone in the club, take care, and I'll talk to you guys as well. Bye.
Bye.